As we came to know that the risk of material misstatement may exist at two levels, that is, the overall financial statement level, the assertion level for classes of transactions, account balances, and disclosure. So, what is risk of material misstatement at the overall financial statement level? It refers to the risk of material misstatements that relate pervasively to the financial statements as a whole and potentially may affect many assertions. Risk of material misstatement at the assertion level are assessed in order to determine the nature, timing, and extent of further audit procedures necessary to obtain sufficient appropriate audit evidence. This evidence enables the auditor to express an opinion on financial statements at an acceptably low level of audit risk. The risk of material misstatement at assertion level comprises of two components, that is, inherent risk and control risk. Both inherent risk and control risk are influenced by the client. There is always a risk that before considering any existence of internal control in an entity, a particular transaction, balance of an account, or a disclosure required to be made in the financial statements of an entity have a chance of being misstated, and such misstatement can be material. This risk is known as inherent risk. Control risk is a risk that internal control existing and operating in an entity would not be efficient enough to stop from happening or find and then rectify in an appropriate time any material misstatement relating to a transaction, balance of an account, or disclosure required to be made in the financial statements of the entity. There exists an inverse relationship between the control risk and internal control of the entity.